Hey friends, Tony from Tax Res Group, and if you're new to the channel, do us a favor, click the subscribe button, maybe hit the little bell. It does help us produce more content, and I think everybody can benefit from this content, which is why I make it. So today we're going to talk about what are the 3 things I can invest in to lower my tax liability. Well, it's pretty simple. 401k. Number 1, if you have a W-2, either your own because you work for yourself or you work for somebody else, easiest way to reduce your tax liability, every dollar you put in there reduces your taxable income by $1. Not your tax by $1, but your taxable income. Item 2, property. Personal property, rental property. If you live in a high value state, California, New York, a few others, it's difficult to buy a house to live in because the payments are so high. Where we are in Huntington Beach, California, the average house out here runs close to $1 million, which even with 20% down, your payment's about $8,000 or $9,000, out of reach for so many people. What I instruct my clients to do instead, buy a house somewhere else. I had a client, she bought a house in Texas, $280,000 house. She rents it out for $2,400 a month, makes her about $500 a month of net income, but she actually takes a loss on her taxes. Well, how could she take a loss if she's making $500 a month? The word depreciation. She gets to depreciate the property, which greatly reduces her profit to actually a loss status. So the rent she makes is essentially tax-free, which is kind of a cool thing to do. You're building equity in the property, yet you're showing a loss on your Schedule E for real estate because you're taking depreciation and the other costs associated, property tax, mortgage interest, etc. And unlike your personal house, there is not a $10,000 tax cap as there is with your personal property. So if you buy a house, you can write off up to $10,000 of property tax or state income tax. Well, if you make any kind of money to afford a house in California, chances are you're paying $10,000 in state income tax all by yourself. Therefore, you do not get any benefit from property tax. Don't write off a dime of it, you just pay it. With a rental property, not true. That's in a separate category, a separate schedule, Schedule E. So you're writing off all of that property tax, all of that mortgage interest. If you have an HOA, gardener, pool man, all of that plus depreciation, something else you cannot take on a primary residence. So rental property is really a good way to go. And people ask me, well, I don't have $280,000. I have a couple houses that I own that I purchased in Alabama for $100,000. They rent for $1,000 a month. People say, well, that's dumb. Really? Multiply the $100,000 and the $1,000 by 10. That would be like $1 million house making $10,000 a month in rent, which you cannot get anywhere. By buying smaller properties, the rent is disproportionately higher, I should say, so that while I can't get $10,000 a month for $1 million property, I can get $1,000 a month for a $100,000 property. I just bought 4 or 5 of them. Makes sense. The ROI is great. The capitalization rate on the investment is great. And the risk is spread out because I have multiple properties. So I always encourage people, instead of buying one, putting all your eggs in one property, buy 3 or 4 smaller properties and diverse. Why? One renter doesn't pay. That's the only property you have. You're in the hole. You have 5 properties, one doesn't pay. You're not missing a beat because you already have it covered with the other 4 properties. So these are things that you need to think about when you're trying to grow your equity and your net worth and lower your tax bill at the same time. Very, very important. The last thing I want to talk about is the future. What are you doing for your future? So many of us live check to check without thinking about our future. I said this in an earlier video. Don't let your older self hate your younger self for not investing in yourself. I always believe in maxing my 401k. I believe in a Roth also to put $6,000, $7,000 in that every year. I think it's up to $8,000 now you can put in. Why? Taxes eventually will go up. They're not going up for the next 4 years, thank God. That's not a political statement. That's a tax statement because I like low taxes. I like benefits to people. They are going to try to pass making Social Security tax-free, making tips tax-free, making overtime wage tax-free. That'll be so huge for all of us. Think about that. As a business owner, my biggest problem with overtime is I still have to pay 8% in payroll tax on that bigger number. Well, if it's tax-free, life becomes good for me too. I want people to work more overtime. It'll be less cost to me. Item 2, Social Security. So many of my clients depend on Social Security just to make ends meet. And they have a side job where they make $20,000, $30,000. And then when I tell them, oh, 85% of your Social Security is now taxable, it kills them. That's only a few $1,000s, but that few $1,000s makes a difference to people. And if we can go tax-free on that, I think it will help a majority of our seniors who are really struggling right now. So again, paying attention to how things change and where they move the cheese, as I like to call it. When they move it, we need to go where that is so we can continue to eat. So you have to look at the strategies that are making available: 401k, Roth, rental real estate. Now, if you're self-employed, you start an S-Corporation, get a side gig, there's advantages there. You're writing off more things because in the federal guidelines, you can't write off anything if you're W-2. No work expenses at all can be expensed through W-2 wage on the federal level. You have a corporation, you can write all of that off. There's a lot of great strategies out there if you're willing to learn and look and know how to use them. We are here to teach you if you want to learn. My biggest thing with clients is they have to care about their future more than I do. I care very much about all of your futures, but I can't care more than you do. We do have clients that come in and say, I don't care. Literally, there are 2 other tax offices in our building, and I will point them to the H&R Block building next door to me and say, go there, please. They don't care either. You guys are a perfect fit. However, if you do care, we want you here. So if you have questions, click the link, give us a call, leave a comment. We're always here to help, and I'll see you next time.